There is a complete collapse in trust in the Americans. And I think I would argue that, the Chinese now absolutely believe that if they were to let Russia lose this war, Biden will go after China next. So therefore, as a result, right now, China cannot afford to let Russia go down. I would argue what happened 2 weeks ago, to the extent China didn't announce to the world that we chose basically Russia, but action speaks louder than words. To me, what happened 2 weeks ago is about the most bullish gold-based development that you can think of that happened in the last 10 years.
You're watching Silver News Daily. Subscribe for more. Could silver really hit $500 an ounce? David Wu thinks so, and here's why you should pay attention. Imagine a world where the strategic gold accumulation by Russia and China not only disrupts the global financial system, but also sends silver prices skyrocketing. With BRICS nations pushing for a gold-backed currency and moving away from the US dollar, the economic landscape is set for a massive shift. Stay tuned as we dive into the details and reveal why silver might be your best investment yet. Don't miss this opportunity to get ahead of the curve.
But guess what? Biden was able to negotiate a 6-month window before he has to report back to Congress about the progress of the sanctions. Guess what? They haven't done anything. They haven't even basically begun to implement basically the enforcement of the previous sanctions introduced by basically under Trump, let alone any new sanctions. That's the reality. Okay. So that's on the oil side. I think on the gold side, of course, there's also the interest rate components, so on and so forth. We'll see what happens this week. I'm generally think that the non-farm payroll is going to probably, listen, we had a very weak payroll number in April. I think that was a fluke. Okay. I think, the fact is that 3 out of the 4, basically biggest job creating sectors, which are basically, leisure and hospitality, which are government, which are construction, all basically fell out of bed in April. That just didn't make any sense to me. Okay, not at the same time. So I think we're going to see a bit of payback. So from that point of view, the market is looking for 190,000 job numbers this week. I think the numbers are going to be bigger. And the rates could probably go higher. And that could be probably short-term negative for gold. But I think that will be a good opportunity to buy some gold. But by telling you about the gold story, in terms of the geopolitics, that's a sort of if you have like a 1-year horizon or beyond. Because on a 1-year horizon, again, I'm a short-term guy. I think long-term, I swear short-term, most of my clients are hedge funds who are basically in and out of basically position all day long. Okay. But what I'm saying is that if you think about basically what happened 2 weeks ago, in Beijing, I think it's a huge basically deal. By the way, contingent on that is going to be basically, tied to this is going to be what happens on June 9th, which is exactly a week from today. Okay. Because the European Commission, I just told you, the Deputy Secretary of U.S. Treasury is currently in Berlin trying to pressure the Europeans to join the trade war basically against China. Okay. And what I'm telling you is that the Europeans have a new deadline to make up their mind about this proposed EV tariffs on Chinese imported cars, basically on that day, on June 9th. And my view is that there's an 80% chance that this is going to happen. If that happens, you're talking about basically, I think you're going to see, trade war 2.0, which again is going to accelerate us towards the kind of world that I was talking about earlier, which is pushing China towards the corner, which is towards pushing China even further into the arms of basically Russia. That's what's going to happen. And
the BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, has long been a symbol of the shifting global economic landscape. These nations, representing major emerging economies, have consistently challenged the traditional Western-dominated financial system, advocating for a more equitable distribution of economic power. One of their latest moves is particularly noteworthy: the significant accumulation of gold by Russia and China. In recent years, Russia and China have been strategically increasing their gold reserves, a move that speaks volumes about their intentions to diversify away from the US dollar. This shift is not just about strengthening their own currencies, but also about positioning themselves as key players in a potential new global financial order. The upcoming BRICS summit, scheduled to take place in South Africa, is set to address the introduction of a new gold-backed currency, a proposal that could reshape international monetary relations. Russia and China's actions suggest they are preparing for a future where their economic influence is not only solidified but also expanded. By accumulating large amounts of gold, they are setting the stage for a more stable and independent monetary system. This strategy could lead to profound changes in the global market, impacting everything from national economies to individual investments. The BRICS nations, through their coordinated efforts, are signaling a move towards reducing their reliance on the US dollar and establishing a more balanced global economic structure. This shift has the potential to drive significant changes in the financial world, making silver an increasingly attractive asset. As these nations continue to build their gold reserves, the implications for silver and other precious metals are profound, hinting at a future where their value could skyrocket. Stay with us as we explore how these geopolitical maneuvers could set the stage for unprecedented changes in the silver market.
I think, again, it depends who wins the U.S. election, right? I mean, obviously, the world is a big place. There are a lot of big countries, and everybody wants to basically sit, have the same, basically have a seat at the table. Whether it's Russia, India, basically China, Brazil, all the other BRIC countries. I mean, the U.S. doesn't own the planet at the end of the day. So these countries, if they want to basically have a seat at the table, I mean, listen, we believe in free competition. I have no problem with that. Okay. The question is, how do you go about doing it? Okay. And I'm just saying that Trump, I think, will bring a very different approach than basically what Biden is doing. Okay. Trump doesn't want a war. Trump believes, Trump believes in using deterrence, negotiation to get the best deal possible for Americans. And then by that, I don't mean like corporate America. I'm talking about for the little guys. Okay. That's what he did, okay, in 2018 when he declared trade war on China. Okay, which I thought at the time was the right thing to do. Okay. But guess what? Back then, in 2018, 50% of U.S. trade deficit was U.S. trade deficit with China. In the last 5 years, U.S. trade deficit with China has dropped by $200 billion. Today, only 25% of U.S. trade deficit with China. China is no longer even the biggest exporter to the U.S. It's now Mexico. So from that point of view, what I'm saying to you is that I think Trump, what we need is a president in the White House, okay, who's a pragmatist, who has America's best interest at heart, but who's foremost a transactional president. And what I mean by transactional president is that at the end of the day, like, basic competition between any two businesses. In the end, negotiation is going to lead to a win-win outcome. What has happened under basically Biden, under the very misguided progressive ideology and globalist ideology, is that, you know what? We've now turned this game into a zero-sum game. Okay. And in the end, everybody is going to lose. If we keep going the way we're going under basically Biden. So I think from that point of view, this is why, what the world is going to be like in 10 years' time, I think depends to a great extent what happens the next 5 months.
Russia has been making headlines with its strategic moves in the gold market. Picture this. Despite facing over 16,000 sanctions from Western countries, Russia's economy is not just surviving, it's thriving. In 2023 alone, Russia's economy grew by 3.6%, with another 2.6% growth projected for 2024. How are they pulling this off? One word: gold. While the West has been busy targeting various aspects of Russia's economy, they seem to have overlooked one critical area: the gold market. Russia is now the second largest gold producer in the world, right behind China. They've been steadily increasing their gold production, expecting to boost it by another 4% annually until 2026. This isn't just about producing more gold. It's about creating a financial safety net that sanctions can't easily touch. Here's a fun fact. Russia has pegged its currency, the ruble, to gold. That's right, 5,000 rubles will now buy you an ounce of pure gold. This move is part of a broader strategy to shift away from the US dollar and create a more resilient economy. By building a strong reserve of gold, Russia is not only protecting its economy, but also positioning itself as a major player in the global financial system. Now let's add a twist to this tale. Russia isn't just hoarding gold, it's also setting up new trade routes to dodge sanctions. They've developed new corridors linking Russia to Asia, ensuring that their gold and other commodities can flow freely, even under the heaviest sanctions. These new routes are designed to bypass Western economic pressure, allowing Russia to continue its trade and maintain its economic growth. So what does all this mean for silver? As Russia continues to amass gold and strengthen its financial position, the ripple effects on the global market are significant. Increased demand for gold often leads to a corresponding interest in silver, especially given silver's industrial applications and its role as a financial asset. As Russia builds its gold reserves, the increased stability and potential market shifts could make silver an incredibly attractive investment. Stick around as we dive deeper into how these strategic moves by Russia could drive silver prices up and what this means for your investment portfolio.
About U.S. political risk and global geopolitical risk, to me, actually, they are very, very related. Okay. And how they're related, you may ask. Well, it's very simple. If you look back at the last 4 years, well, almost 4 years under Biden, okay, global defense stocks have gone up 60%. Whereas the global stock market has gone up, 15%. Under Trump, on the other hand, the global stock market went up 60%, and global defense stocks went up 20%. So I think the massive difference, okay, in terms of the relative performance of defense stocks, okay, under Trump versus under Biden, speaks volume about the difference in U.S. foreign policy under these two presidents. I mean, there is no doubt that under Biden, the world is veering closer and closer to World War III, whereas basically under Trump, guess what? He was the first president since Jimmy Carter who did not commit U.S. troops into new foreign conflicts. Okay. I mean, it's actually very interesting because if you recall, 2 months before the 2020 election, in September 2020, Trump actually publicly, okay, attacked his military leadership, accusing his generals for trying to prolong the foreign conflicts the U.S. was involved in so that their buddies at U.S. defense contractors, can sell more tanks, more planes, and more bombs and get more people killed. Okay. So from that point of view, I think this is why, like I keep telling people, at the end of the day, you look at Trump versus Biden, sure, there are major differences where they stand on domestic issues like immigration. But in my view, the most important difference between the two, okay, is actually in the realm of foreign policy. Okay. Whereas Trump was a transactional president who understood making America great is not about projecting more power on the world stage, but rather...
One of the most groundbreaking moves coming out of the BRICS alliance is their proposal for a new gold-backed currency. Imagine a currency that isn't just another piece of paper, but is actually tied to the value of gold. This idea, while still in its early stages, has the potential to disrupt the entire global financial system. So what exactly is a gold-backed currency? It's a monetary system where the value of the currency is directly linked to a specific amount of gold. Historically, this method was used to maintain stability and confidence in national currencies. By tying the currency to gold, governments aim to prevent hyperinflation and ensure fiscal responsibility. However, it also means the currency's value is as strong as the gold reserves backing it. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring this concept to create a more independent and stable monetary system. This move is a strategic effort to reduce their reliance on the US dollar, which has dominated global trade and finance for decades. By proposing a gold-backed currency, these nations are not just looking to stabilize their own economies, but also to shift the balance of power in the global financial system. Imagine the implications of such a currency. If the BRICS nations successfully implement a gold-backed system, it could lead to increased demand for gold as these countries would need substantial reserves to support their new currency. This heightened demand could drive gold prices up, impacting everything from international trade to individual investment portfolios. But it doesn't stop there. A gold-backed currency from the BRICS alliance could set off a chain reaction in the financial world. Other countries might follow suit, looking to back their currencies with gold to ensure stability and gain independence from the dollar. This shift could lead to a realignment of global economic power, with significant effects on markets, economies, and political relationships. For silver, this could mean a surge in value. As the demand for gold increases, so does the interest in silver, often considered gold's less expensive cousin. The stability brought by a gold-backed currency could make precious metals like silver even more attractive to investors looking for safe havens. Stay tuned as we continue to unravel how this ambitious proposal by the BRICS nations could lead to a new era in global finance and what it means for your investments.
I was very disappointed, deeply disappointed. Alan Dershowitz actually already said. I think a lot has already been said, so I don't know if I'm going to add anything new. But I think clearly the fact that the jury decided to convict Trump on all 34 counts in the space of just 24 hours, it's just unbelievable. It's a pretty complex issue, and you could argue, and moreover, this case has a lot of loose ends. For anybody to be able to make up their mind in such a short period of time and in such a conclusive way, in an all-sweeping manner, I think this really does speak to the fact that, there's something seriously wrong with our democracy. And I think that's probably how the world saw it. And I think from that point of view, I think the question really is, like, if we want to basically put it in a way that is apolitical, is what does it really mean for the U.S. economy, and what does it mean for the financial markets? This is what I really care about at the end of the day. And I think, this is actually very interesting, because if you think about this, right? This, S&P 500 is up more than 10% year to date, which makes 2024 the best performing year for S&P 500 year for an election year since 1972. And I'm not just talking about by a small margin, it's by a huge margin. Now, we can sit here and talk about why is it that the market seems completely impervious to the fact that we're in the middle of an election year, arguably the most important election, the most contentious election in the last 100 years. But I do think that, until last week, I think perhaps what the market was thinking about was that the market had already arrived at the conclusion that, Trump was going to basically go on to win the election. And then you saw that, with the polling in Pennsylvania, where his basically lead over Biden was actually widening, despite the massive, ad campaign that the Biden campaign had basically had gone through in the last couple of months. And I think, this is the reason why VIX was going down. Everything felt good because people sort of felt, wow, listen, Trump's going to be good for the economy. The market was coming around thinking that this is going to be good for the stock market, good for everything. So that was the situation. And then whammo came Friday's conviction. Now, of course, the market was down on Friday. The market's trying to rally today. We'll see if the rally holds. But I think, what happened on Friday, I think, sort of injects a new uncertainty heading into this election. In my view, I think, this is what I've been telling my institutional clients over the last 4 or 5 months. In fact, it's a position I've got on myself, which is I bought basically the September VIX futures contract, which I've held for the last 4 months already, basically on the expectation that political risk premium is set to go up as we basically go into the final basically stretch of the election campaign. And I think what happened on Friday only reinforces, it makes me feel much worse about the world, but it makes me feel much better about my long VIX position, basically because I do think that, I think all hell's going to break loose. And I think, between now and then, if the Democrats are willing to do this, what is it that they're not prepared to do to make sure that Trump basically never basically goes into the White House ever again?
Let's take a closer look at China's massive gold hoarding. Picture this. China's central bank has been on a gold buying spree for 10 consecutive months, adding a whopping 29 tons to their reserves in just August alone. This brings their total to an astounding 2,165 tons of gold. Why is China stockpiling gold like there's no tomorrow? The answer lies in their strategic move to reduce reliance on the US dollar. China, along with other BRICS nations, is seeking to insulate itself from the geopolitical pressures that come with heavy dependence on the US dollar. By accumulating gold, China is not only bolstering the credibility of its currency, the yuan, but also positioning itself as a formidable player in the global financial arena. The more gold they hold, the more stable and independent their economy becomes, reducing their vulnerability to external economic sanctions and financial crises. But there's more to this strategy. China's move to amass gold is also about preparing for a potential future where the global financial system could shift away from the dollar-dominated landscape. This strategic accumulation aligns perfectly with the BRICS vision of a gold-backed currency, providing a solid foundation for such a monetary system. By leading in gold reserves, China is setting the stage for greater influence in global trade and finance. And here's an intriguing twist. China's gold hoarding isn't just about financial stability. It's also a powerful geopolitical statement. Amid rising tensions and trade wars with the U.S., China's gold strategy signals a clear intent to challenge the dollar's dominance and establish a more balanced and multipolar economic order. This shift could lead to significant changes in global trade practices and currency dynamics. So how does this affect silver? Well, as China continues to buy gold in massive quantities, the increased demand could drive up gold prices. Historically, when gold prices rise, silver often follows suit. Silver, with its unique position as both an industrial metal and a precious metal, could see a significant boost in value. Investors looking for alternatives to gold may turn to silver, amplifying its market demand and driving prices higher. Stay with us as we explore how China's gold strategy is not just a financial maneuver, but a game-changing move in the global economic chessboard, and what it means for your investments, particularly in silver.
All three people brought to China was this message: stop supporting Russia or face punishment. Seriously. So from that point of view, this is actually very interesting because until now, the Chinese position is no different than the position of India and lots of developing countries, which is that, they're all sitting on the fence. It's like, well, we're neutral when it comes to this war, okay? But because the Biden administration had already, was growing increasingly helpless, at the prospect of a potential defeat of Ukraine, they decided to basically go to China and basically put this on China. In other words, they issue an ultimatum to the Chinese: choose Russia or basically face punishment. And guess what? I have no idea what was said in that final meeting between Blinken and Xi Jinping. All I know is this: the next week, when Putin landed in the same day that Putin landed in Beijing, guess what? The US rolled out massive, basically, tariffs on Chinese EVs, on Chinese batteries, on Chinese, basically, solar panels. I think that the fact that these two things happened at the same time tells you exactly what China's answer was to the US demand, which is, screw you. Okay. It was very clear that when push comes to shove, when China had to basically choose between Russia and punishment, China chose punishment. Okay. And I think, I think you might say, well, what was the reason? I think it's very simple. What we do know from the transcript that was released by the Chinese after Xi Jinping's meeting with Anthony Blinken, Xi Jinping actually said, you know what, you Americans, you say one thing and you do something else. There is a complete collapse in trust in the Americans. And I think I would argue that, the Chinese now absolutely believe that if they were to let Russia lose this war, Biden will go after China next. So therefore, as a result, right now, China cannot afford to let Russia go down.
Now let's talk about how all this gold accumulation is impacting global gold prices and what it means for the market. Imagine a seesaw where one side is the BRICS nations hoarding gold, and the other side is the rest of the world watching gold prices climb higher and higher. That's exactly what's happening. The BRICS strategic move to increase their gold reserves has already started making waves in the global market. As Russia and China continue to buy up vast amounts of gold, the demand naturally pushes prices up. This increased demand isn't just a temporary spike, it's part of a larger trend that could reshape the financial landscape. Historically, gold has been seen as a safe haven during times of economic uncertainty. Central banks around the world hold gold as a reserve asset, and individual investors flock to it during market downturns. The BRICS gold rush is adding a new layer to this dynamic. By tying their currencies to gold and moving away from the US dollar, these nations are signaling a major shift that could lead to sustained high demand for gold. For investors, this is a critical moment. The rising gold prices driven by the BRICS strategies are creating new opportunities and challenges. On one hand, the increased value of gold can mean substantial gains for those who have invested in it. On the other hand, the volatility that comes with these geopolitical shifts can make the market more unpredictable. But here's where it gets even more interesting. The ripple effects of rising gold prices extend beyond the gold market. precious metals in general tend to move in tandem, meaning that as gold prices rise, so do the prices of other metals like silver. Silver, often referred to as the poor man's gold, becomes an attractive option for investors looking for a more affordable entry into the precious metals market. As the BRICS nations continue to hoard gold and potentially implement their gold-backed currency, the increased stability and value of gold could make silver an increasingly valuable asset. Investors might turn to silver as a way to hedge against the volatility of other markets and capitalize on the rising tide of precious metal prices. So what does all this mean for you? If you're considering investing in precious metals, now might be the time to pay close attention. The moves by Russia, China, and the rest of the BRICS alliance are setting the stage for significant changes in the global financial system, and getting in on the silver market could prove to be a savvy move. Stay tuned as we delve deeper into the relationship between gold and silver, and how the current geopolitical shifts could create unprecedented opportunities for savvy investors.
Not counterintuitive because geopolitical risk and Chinese diversification is not the only thing that's driving gold or oil for that matter, right? I mean, what is driving oil is basically geopolitical risk in the Middle East, which has nothing to do with China or Russia, by the way, right? I mean, basically, you saw, like I live in Israel, okay? Biden is selling Israel down the goddamn toilet. And I think I mentioned that maybe the last time I was on your show. Because if you actually look at what Biden just rolled out, oil had already gone up last week, and then wham, on Friday, it collapsed. Went down 2 points because what? Biden has adopted, okay, basically a ceasefire proposal of Hamas. Biden is now saying that he's in favor of a permanent ceasefire. What does a permanent ceasefire mean? That means that Hamas will be allowed to basically survive. That means that Hamas actually, in the end, will reap the rewards of what they did on October 7th. Why? Because Biden does not want, Israel to go into Rafah in fear that Iran might retaliate, in fear that he might come under more pressure from U.S. Congress to actually start implementing the sanctions on Iranian oil export. Because Biden knows if oil price were to go up to, let's say, even $90 or $100 a barrel, he's toast. Okay. So from that point of view, again, oil market understands that very, very well. Okay. That the U.S. right now is threatening to withhold military support to Israel. I'm not talking about U.S. Congress. I'm talking about Biden. Biden, has handed $50 billion over to the Iranians. I would argue that Biden has blood on his hand to the extent that in the end is with the money that the U.S., basically, let's put it this way. If Biden had kept enforcing the oil sanctions, Iran wouldn't have had the extra $50 billion that it came into to basically divert some of it to Hamas to basically launch the attack on basically Israel. So from that point, and now Biden is trying to sell Israel down the toilet. So far, Israel, this is the reason why Israel hasn't really gone into Rafah. They just, instead of sending 2 divisions in there, they got 5 battalions there, just basically trying to secure the Philadelphia corridor, which is the border between, Israel and Gaza and basically Egypt. So again, that's why the oil story is a very different thing. It's actually arguably, that's what it is the election consideration. That's why I was telling you that political risk and geopolitical risk are very, very much intertwined right now. The U.S. elections is the reason why oil prices are basically being, essentially held back, because the U.S. administration not only is turning a blind eye. But think about this, right? U.S. Congress last month passed a new bill that was signed into law by Biden himself to increase sanctions on Iranian oil exports.
Let's now explore silver's unique role in this evolving economic landscape. While gold often grabs the headlines, silver has its own compelling story, especially in the context of the BRICS nations' strategic moves. Unlike gold, which is primarily used as a reserve asset and a hedge against inflation, silver has extensive industrial applications. From electronics to medical devices, its versatility, conductivity, and relative affordability make it a critical component in numerous industries. This dual role as both an industrial and precious metal gives silver a unique market dynamic, often influenced by both economic growth and financial uncertainty. As the BRICS nations accumulate gold and push for a gold-backed currency, the ripple effects on silver could be significant. Historically, when gold prices rise, silver prices tend to follow, but the relationship isn't always one-to-one. Silver's market behavior is also driven by industrial demand, which means it can sometimes outpace gold in terms of price movement during periods of economic expansion. Here's where it gets fascinating. The BRICS move to reduce their reliance on the US dollar and establish a more independent monetary system is likely to spur increased investment in precious metals across the board. As gold becomes more valuable and sought after, investors who might be priced out of the gold market could turn to silver as an alternative investment. This increased demand, coupled with silver's vital role in industrial applications, could drive silver prices even higher. Additionally, silver's relative affordability compared to gold makes it an attractive option for both individual investors and institutional buyers. With the BRICS nations signaling a shift towards precious metals, silver's market dynamics are set to become even more interesting. Investors looking for opportunities in the precious metals market might find silver to be the more accessible and potentially lucrative option. But there's another angle to consider. The geopolitical stability that a gold-backed currency could bring might also enhance the appeal of silver. As these nations build their gold reserves, the perceived stability and security of precious metals will likely increase. This could lead to a broader acceptance of silver as a viable investment, further boosting its market value. In essence, as Russia and China continue their gold rush and the BRICS alliance moves towards a new economic order, silver stands to benefit significantly. The combination of increased industrial demand, investor interest, and geopolitical shifts could create a perfect storm for silver prices to soar. Stick with us as we continue to unravel how these developments could position silver as a key asset in the new global financial landscape and what this means for your investment strategy.
They're making the little guys, okay, in America participate in the prosperity of American economy. Whereas Biden, on the other hand, it just, apparently he thinks that, the only way to safeguard American power is beat up on anybody who's actually in a position to threaten. Okay, so from that point of view, it's a very different approach to competition. One is trying to manage competition. The other one is trying to destroy competition. And then very, very different, basically, I think, set up. So I think from that point of view, I think what you're seeing right now is a good example, right? I mean, if you are, like, for example, right, I know a lot of your investors are, gold bugs, right? I mean, if you ask me, like, what is, like, the most bullish gold story in the world that happened the last, basically, 3 weeks? Is this. I'll tell you what it is, right? We know that, Ukraine is losing this war, okay, to Russia. And by the way, it's not about taking a side. I do think that Russia is fighting a defensive war to the extent that, just like the US would never allow the Soviet Union to basically place missiles in Cuba, it's understandable Russia did not want NATO to place basically missile launchers directly on its border in Ukraine, which NATO would have done if Ukraine had become a NATO member. Okay, so I think Russia is fighting a defensive war, but it doesn't really matter. But the point here is this, right? The Biden administration understands that Ukraine, okay, right now is in a very vulnerable position. Okay, the Russians finally are advancing very quickly on the verge of launching a major offensive that could potentially, deal a decisive, basically, defeat on Ukraine. So what does the Biden administration do, right? So in April, I'll tell you, you had Janet Yellen going to China, you had Olaf Scholz, the German chancellor, going to China, and then finally
now let's delve into David Wu's analysis and predictions on how these geopolitical and economic shifts could lead to a significant rise in silver prices. David Wu, a renowned macroeconomist, has been closely monitoring the BRICS alliance and their strategic accumulation of gold. His insights provide a fascinating perspective on why silver could be the next big winner in this scenario. According to Wu, the strategic moves by Russia and China are more than just a defensive measure against Western sanctions. They are part of a grand strategy to realign the global financial system. By accumulating vast reserves of gold, these nations are not only safeguarding their economies, but also preparing to challenge the dominance of the US dollar. This shift is creating a ripple effect in the precious metals market, particularly for silver. Wu points out that the BRICS push for a gold-backed currency is a game changer. If successful, it would reduce the world's reliance on the US dollar and increase the demand for gold significantly. However, the implications for silver are equally profound. As gold prices rise due to increased demand, silver, often seen as gold's more affordable counterpart, will likely see a surge in investor interest. One of Wu's key predictions is that silver's unique dual role as both an industrial metal and a precious metal, positions it perfectly to benefit from these geopolitical shifts. As the BRICS nations build their gold reserves and push for a more stable and independent monetary system, silver's value as a versatile and accessible investment will become more apparent. Wu also highlights the potential for silver to outpace gold in terms of price growth. Historically, silver has shown the ability to make more significant percentage gains than gold during bull markets in precious metals. This is partly due to its lower price point, which attracts a broader range of investors, and its critical role in various industrial applications, which drives demand during economic expansions. Moreover, Wu emphasizes that the current global economic environment is ripe for a significant shift towards precious metals. With ongoing geopolitical tensions, trade wars, and economic uncertainties, investors are looking for safe havens to protect their wealth. Silver, with its combination of affordability, industrial use, and historical performance, stands out as a highly attractive option. In summary, David Wu's analysis suggests that the strategic gold accumulation by Russia and China, coupled with the BRICS ambitions for a gold-backed currency, could create a perfect storm for silver. The increased demand for gold will likely spill over into the silver market, driving prices higher. Silver's unique market dynamics and dual role make it an exceptionally promising investment in this new economic landscape. Stay with us as we prepare to conclude this exploration by tying all these insights together and explaining why now might be the perfect time to consider investing in silver.
This is why I think, ironically, I've always said this, under Trump, Russia and China kept their distance. Every time Trump talked about Xi Jinping, he said, well, Xi Jinping's a great man, he's my best friend. Every time Trump talked about Putin, he said, well, Putin is a great man, he's my best friend. As a result, China and Russia basically stay as far away from each other as possible because they didn't want to basically annoy Trump. Biden came in and immediately presided a shotgun wedding between China and Russia by pushing basically Russia into the arms of China. Now, what is interesting is that, but nevertheless, the reason why I'm saying this is very bullish gold is because, as I said, 2 weeks ago, China basically made it very clear to the whole world that China chose Russia. Now, what does that mean? Now, again, if Biden somehow is reelected, that means this polarizing world is going to get even more polarized. That means that now the U.S. is imposing tariffs on Chinese exports. And by the way, the Deputy Secretary of U.S. Treasury is in Europe this week, trying to pressure Europeans to join the trade war against China. So from that point of view, if Biden gets reelected, the situation is going to get even worse, which means that the Chinese are going to start to think, well, listen, the way things are going right now, the total sanctions that the U.S. had imposed on Russia, we could be next. They can freeze our reserves. So they're going to accelerate even further, even more quickly, the diversification of dollar into gold. So I would argue, if you're a gold basically bug, I would argue what happened 2 weeks ago, to the extent China didn't announce to the world that we chose basically Russia, but action speaks louder than words. To me, what happened 2 weeks ago is about the most bullish gold basic development that you can think of that happened in the last 10 years.
Let's bring it all together in our final step, the apex, where we explain why silver could realistically reach $500 an ounce due to the strategic moves by the BRICS nations. We've explored how the BRICS nations, particularly Russia and China, are reshaping the global economic landscape by amassing gold and proposing a gold-backed currency. These actions are not just defensive measures against Western sanctions, but a strategic push towards a more balanced global financial system. The implications of these moves are profound, especially for the silver market. David Wu's analysis reveals that as the BRICS nations continue to build their gold reserves, the increased demand for gold will drive prices higher. This surge in gold prices historically leads to a corresponding rise in silver prices, but there's more at play here than just historical trends. Silver's dual role as both an industrial metal and a precious metal positions it uniquely in the current economic environment. With the BRICS nations pushing for a gold-backed currency, the stability and appeal of precious metals will likely increase. This makes silver an even more attractive investment, not just for its historical relationship with gold, but also for its critical industrial applications. Imagine the global market adjusting to a new gold-backed currency. The demand for gold would skyrocket, And as a result, investors who might be priced out of the gold market will turn to silver as a viable alternative. This shift in investment focus could drive silver prices up significantly. Furthermore, the industrial demand for silver continues to grow. From electronics to medical devices, silver's unique properties make it indispensable. As global economies recover and expand, the demand for silver in these industries will only increase, adding another layer of upward pressure on its price. So why $500 an ounce for silver? It's a combination of these factors: the strategic accumulation of gold by Russia and China, the potential implementation of a gold-backed currency by the BRICS, and the increasing industrial demand for silver all point towards a significant price surge. David Wu's insights underscore this potential, suggesting that the economic and geopolitical shifts we're witnessing are setting the stage for unprecedented gains in the silver market. In conclusion, the actions of the BRICS nations are creating a unique opportunity for silver to shine. The combination of rising gold prices, increased investor interest in silver, and growing industrial demand could drive silver prices to new heights. Now is the time to consider silver as a strategic investment to capitalize on these emerging trends. Don't miss out on this potential financial revolution. Subscribe to our channel for more in-depth analyses and stay ahead of the curve. Remember, this is not financial advice, but an exploration of possibilities that could shape the future of the global financial system. Stay informed, stay prepared, and let's navigate these exciting times together.